When you look at a company's financial report, it can feel like you're trying to read another language, right? All those numbers. But what if I told you it's actually a story? A story full of clues about where a company's been and where it's headed. Today, we're going to decode the story of a company called Aarvi Encon just by looking at the numbers.
So here's our game plan for piecing this all together. First, we'll get to know Aarvi Encon. Then we'll do what every good detective does, follow the money. We'll see how much is coming in, what's left over as profit, and where the rest of it goes. And finally, we'll give it a quick financial health check to see if it's built to last. Sound good? Let's dive in. All right, first things first, who exactly are we talking about here? Who is Aarvi Encon?
Okay, so their official business is technical manpower outsourcing. So, what does that actually mean? Well, you can think of them as a high-tech matchmaking service, but for engineers and technicians. They connect these really skilled professionals with big industrial projects that need their expertise.
So that's what they do. It sounds pretty important, right? But the real question is it a good business? To figure that out, we've got to look at the financial story. So let's see what the numbers are telling us. Okay, let's start at the very, very top of the financial statement. We're talking about the top line, which is just a fancy word for revenue. This number tells us the total amount of cash the company brought in from all its sales, before a single bill gets paid. Think about it like this. Your salary is the total amount on your paycheck, right? Before you pay for rent, groceries, or anything else. That's exactly what revenue is for a company. It's their total paycheck. It's the starting point for literally everything else.
So let's put a number to it. For the financial year ending back in March 2020, Aarvi Encon's revenue was just under 2.2 billion rupees. Okay, so that's our starting point, our baseline. Now keep that 2.2 billion figure in your head, because if we fast forward just 3 years to March 2023, well, that revenue number jumped to over 3.8 billion rupees. That is a huge leap in just a few years.
And when you see it on a chart like this, the growth is, wow. It's just impossible to miss. You don't have to be a finance whiz to see that sales are rocketing upwards. But hey, making sales is one thing.
But the real question, the million-dollar question, or in this case, the billion rupee question, is, are they actually making any money after all the bills are paid? And that brings us to the famous bottom line. So if revenue is the big number on your paycheck, then profit is what's actually left in your bank account at the end of the month, after you've paid for everything. It's the money the company can actually use to invest, to grow, or to give back to its owners. Let's go back to our 2020 baseline. Back then, Aarvi Encon's profit was nearly 72 million rupees. Not bad at all, a pretty healthy number. And by 2023, that number grew to over 141 million rupees. Now think about that. It didn't just grow a little bit, it nearly doubled in just 3 years. That's impressive. And this, right here, is the really important part. See, it's one thing to grow your sales, but it's a whole different ballgame to grow your profits right alongside them. The fact that Aarvi Encon's profits have pretty much kept pace with that massive revenue growth, that is a fantastic sign of a really well-run business. Okay, so we know revenue is way up and profit is way up, but what about all that money in between? Where does it actually go? Let's take a peek at the company's biggest costs. This is really cool because this chart tells you almost everything you need to know about their business model in one glance. A whopping 78% of all their costs are for employee benefits. And that makes perfect sense, right? Their entire business is providing skilled people, so their main product is their people, and this is what it costs to have the best on your team. All right, so the company's growing, it's profitable, things are looking good, but is it all built on a solid foundation? Or is this like a house of cards ready to topple over? To figure that out, we need to do a quick health check by looking at its balance sheet. Think of it as a snapshot of what the company owns versus what it owes. Okay, so check this out. As of their latest report, the company's assets, that's all the stuff it owns, are worth over 1.7 billion rupees. And its liabilities, that's what it owes to others, are less than half of that, at around 750 million. The story here is super clear. They own way more than they owe. And that difference, the gap between what you own and what you owe, that has a name. It's called equity. And honestly, the easiest way to think about it is as the company's net worth. It's a really fundamental measure of its financial strength. So for Aarvi Encon, when you do the math,
That equity comes out to over 1 billion rupees. That's a seriously solid financial cushion. It tells you there's real, tangible value built up inside this company. So, let's take a step back. We've looked at revenue, profit, where the money goes, and the company's overall financial health. What's the big picture here? What's the complete story these numbers are trying to tell us? When you put all the pieces together, the numbers paint a really clear and consistent picture. This isn't just a company that's growing fast. No, it's growing profitably. And it's doing all of that from a position of real financial strength. That's the trifecta.
So, we've just walked through the financial story of one company, piece by piece. The next time you come across a financial report, try to remember this little framework. Look past all the complicated jargon and the raw data, and just ask yourself one simple question. What story are these numbers trying to tell me?